guys, welcome back to the channel, welcome back to a new video. The day after the FOMC meeting, and we got indeed 0.25% interest rate hike. And what does it mean exactly for Bitcoin? Well, I can tell you that there is a serious valid scenario that we might go to 26,000. I'm going to show you exactly what I mean. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think that's useful. Now without further ado, let's start diving into the charts. This is BTC USD on the 4 hour. And as you can see, I've drawn a fib, and that is from this bottom to this top, and we bounced yesterday exactly at the golden pocket. We got the news of the 0.25%. We went down just a little bit. The movement was not more than approximately 1%, and once we just tapped the golden pocket, right away we went higher, and that is actually also when the statement or the public speech of Jerome Powell started, and then we just moved up higher and we took out the highs here again, and we now tapped into that box. And as you can see, now we have 4 points where we have liquidation here at the bottom. Very juicy to take this out, and that might just happen on the short term, because it looks like that we have again a bearish divergence, this time on the 4 hour. We have already so many bearish divergences, but not a lot of them playing out, or when we have them, the reaction is pretty mild. I mean, here we had one as well, where the momentum wave already went lower, and eventually you do get a move, but it's just not that much, 2-3% for most of the moves. Actually, what I do expect that now as well is that we are going lower, maybe to take out this liquidity, and then to move up, back to the upside, and to maybe go for that 26k. That would be super nice. Then we still have a bearish divergence, which is respected. It did give us then a little bit of a move, 4, 5, 6%, depending on where we are going to end. And then eventually to go higher. Why do I think we are going higher? And that is the really macro time frame. This is the 12 hour. Let me take this one out. There you can see just how incredibly thick here the money flow is. The RSIs are also still together. Momentum waves, yes, are coming down, so you could speak of a gigantic bearish divergence, but that money flow is just so thick, and it will probably push us higher. For the daily, exactly the same. And it looks like we are printing ourselves a green dot. Now you could speculate saying, you know what, if the price goes even higher, we're making a bearish divergence on the daily. But for now, I also want to focus on this. RSIs are together, which means strength, and the money flow is also thick in the green. 2 days also exactly the same. So these macro time frames, they're just still super strong. So on the quote unquote a little bit smaller time frames, so 4 hour and everything below, we do have those bearish divergences. Not always do they play out, because higher time frames are stronger than the smaller time frames. But I do expect that if we are printing red dot, we're getting at least a little bit of a follow through on the 4 hour, and then to eventually go higher again. Like I said, this is the box that we talked about already earlier. That is the highs that we put in from a couple of months ago. Starting off here from July, we had that triple top, and now it looks like we are entering that box again with the absolute top at 25,200. But above, we have from 26,000 on to 26,500 a macro golden pocket, and I wouldn't be surprised if we are going to hit that in the next week or two, because that is then measured from this top till the absolute bottom all the way back. Then you get 26,500. The only thing is that you can see, let me zoom in here a little bit, is that there is just barely any resistance. This price action from what is it, 28,000 ish down, that just went so fast, and you can see that there is just almost no resistance. So if we are going to hit that golden pocket, there is also a fair chance that we are going higher to even 28,000. Taking it step by step, level by level, trade by trade, but it is a fair chance. And let's be honest, so far this rally has been very much hated, and a lot of bulls and bears are kind of standing on the sidelines. Well, bears are probably getting wrecked, but bulls on the sidelines. Also, from time to time, even me, I'm pretty surprised by how strong this uptrend suddenly is and how far it takes us right after that bear market and that very, very briefly accumulation phase, which I also thought that would take at least another 2 or 3 months. But now here we are today. And then we just have to go with the flow and say, you know what, since these macro time frames are still so strong, it was probably most likely that we are going higher before we are going lower. Yes, there are maybe retracements from a couple of percent, 3, 4, 5, but a real big retracement back to maybe 18k or 16k is probably not in the cards anytime soon. Again, if this 4 hour plays out, I will play it as a short, maybe an SFP, also play it as a short. If we are going lower and we find support here at the value area high around 23,200-ish, and we are bouncing up, then I'll also play it as a long, because then it shows that the value area high is support and that we are maybe going higher and forming there a new trading range. That is a sincere possibility. If we are breaking this and we are going much lower, then I want to see first a bearish retest of this level right here before I will put in a major short. But for now, I think that every quote-unquote retracement, whatever that may be, 3, 4, 5%, can be used as an opportunity to long until the bigger time frames are also transitioning. This is EVE, also on this is EVE on a 1 hour, and we drew out here the liquidities on the top. That one has been taken out yesterday by this move up. Of course, also FOMC, that only then resides the liquidity at the bottom of this range. And right now we are nice into that golden pocket, 1664. 1695, and we had that top here 1680. So this is actually a very nice point to reverse to the downside, maybe to also create something like a bearish divergence just above the golden pocket, and then to go lower. If that happens on the hourly, I will also play it. Let me quickly see what we have here on the 4 hour. No bearish divergences on these candles. Here it already looks a little bit more bearish than it does on BTC, but you could also say, you know what, these are just very nice trigger waves. So also here, every moment that it's a trigger wave is forming, it was just an opportunity to buy and then for us to go higher. So that is then nice. If we are going higher, let's say BTC starts pumping again, my first target would be 1790. That is also a macro high here, or significant high, dating from September 2022. So that is a point that I'm looking out for, 1790. If we're going lower, of course, then I want to see the liquidity taken out. That is now at 1500. That's the most important level. And if we are then going lower again, I will be looking out for the golden pocket. But to be honest, I don't think that we are going to hit that anytime soon. Want to have a quick look at the dollar index, because yesterday, because of the news, stocks and crypto rallied higher and the dollar index went lower. But I just quickly want to show you that, believe it or not, our macro bullish divergence is still in play 3 months later. This wave has not come lower than the very first one that you see here, so it is still in play, but we did broke the weekly level at 101.6. If we are going higher from here, then I'm first looking out at this smaller golden pocket, resting at approximately 103.8 to 104. But if we are going really higher from this level, and this is the bottom, then I'm looking out for that 109, 110 for the macro, but that will probably take then also 1 or 2 months to play out. I wouldn't be surprised if we first go even a little bit lower before we are finally really reversing. Nothing goes up in a straight line or down in a straight line, so there will be a reverse moment. This will then eventually go up and stocks and crypto will sell off again. It's just a matter of when will this happen. Like I said, I'm pretty surprised by the intensity and the severity of this bull market, and just the strength of all the moves. Is just barely in our retracement and going higher and higher and higher. It looks like we are in full-on bull market with just flipping the page. I think that is what a lot of people are caught up by surprise. One last look, I want to look at the S&P 500, because also here the ES, the mini futures, we pumped up yesterday quite fast after the news came out. Is just a full-on risk assets, because Powell said, well, we're only doing 0.25, probably also in the next one 0.25. And yes, we are talking about the fact, should we stop rising the interest rate, and what will be a good moment? When that was being asked and he answered that, then everything went really higher, and that just shows that the Fed thinks that it is a good time to press on the brake for a little bit, see what's going to happen in the next 6 to 9 months, because their implications still need to be felt, and that was just a green light then for risk assets to go higher. We'll see. I have to say I was a little bit surprised by the tone of the Fed. They sounded pretty optimistic, pretty dovish, and said, yeah, we are staying really careful. We do not want to have like kind of a scenario like in the 70s where inflation goes down and spikes up and goes down and spikes up. So they want to maybe over tighten a little bit. But so far, most of the numbers coming out for a lot of companies in the S&P 500 are much better than expected. And I also stated this already a few times on Twitter. Maybe unintentionally or intentionally, they are engineering a soft landing. So then a very, very mild recession, or barely a recession. That's going to be interesting to see. That will unfold in the next 9 to 12 months. But I think a soft landing is back into the cards right now, because inflation looks like it's really coming down, and so far it looks pretty good for the earnings for most of the companies. With that being said, closing off here today, you will find me on Twitter. I will update you there multiple times a day. If I see something interesting also other than just crypto, I will try to update you in the meantime. And then of course you can also follow me on Instagram. For Twitter and Instagram, links are in the description. Feel free to check it out, and I would also highly appreciate it if you would like this video. Subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think this is useful, and see you guys very, very soon again in the next one. Bye bye.